The cost of mortgages has gone up 35%, and I'm going to break down how you can save an average of $8,000 in closing costs by following these 3 steps. Before we go into those, let's understand what fees you're actually paying and how that is distributed. So the first thing is lenders need to make money in order to provide lending services to you. So the way they make money is through lender margins, which is basically in the interest rate and how much money they make. They make money by underwriting and processing fees, and also origination fees if you're using a VA home loan. And another way that lenders make money is through servicing loans. Now, this is just for straight up mortgage companies. Now, the thing is that lenders do have ridiculous expenses when it comes to those things like processors and underwriters. They have support staff, operations, closing, post closing. That's just to name a few. Now, one of the big ones that does drive pricing is going to be the marketing cost associated with that. So if you like someone's commercials or they have famous people in there, those people are not for free. They cost money, and then that money has to be passed on to you in some way. Now, let's say versus a realtor where they typically have themselves or like another staff person, so they're able to keep most of that money, where in lending, that's not how it works. Now, how that money gets passed on to you is going to be determined by that lending company. And I saw a recent thing from Freddie Mac, a study that they did that basically said that the top mortgage companies, top 25%, on average charge about, or the cost of the loan is about $6,900. Versus the bottom 25%, those same costs are actually over $16,000. So there's about a $10,000 spread working with companies that don't know how to manage their money and their staff, and they're just overspending. But guess what? Veterans and people that are out there are still paying that money. Not too long ago, I did a video that on average, every single month, veterans pay over $32 million in junk fees, which I think is crazy, but they do it. And that's just because they're not focusing in on what are the origination fees, the underwriting processing fees, what are the lender margins. And I'll share a quick story before I go into the 3 steps. On an almost daily basis, because of viewers like you reaching out, we save people a lot of money because of lender margins, right? Recently, we looked at someone, actually yesterday, we were able to save them $8,000 for the same interest rate that the other person was offering, just because of their charging discount points and origination fees, because they market to the veteran community. You know them 100%, but this is something that we see all the time. Now let's go to the 3 steps you need to understand when identifying the cost of a loan, and it changes a little bit over time, right? So the first thing that you do, the first step in the home buying journey, is you're going to be shopping for a lender because you need to have a pre-approval. Now, you have a 45-day window from the time you have your credit looked at to have unlimited credit pulls, and they'll only count as one credit inquiry. Now, listen, a lot of people will be like, well, it stays on my credit for 2 years. That's only through like Vantage Score. Mortgage companies and lending companies do not look at those credit scores. We look at FICO scores from a lending perspective. So after 90 days, those credit inquiries have no effect unless you take out new mortgage and then, or new credit, then it will have an effect on that, right? So if you're going through that pre-approval process, the thing you need to ask a lender is, what are their underwriting, processing, and origination fees? No credit check is required for them to answer that question, right? You can just call them and say, hey, I'm looking to use my VA home loan. I'm looking at a $400,000 price point property. What are your underwriting, processing, and origination fees? Some will tell you, well, we don't charge any origination fees or processing or underwriting fees. Some will divert around that, be like, oh, well, it really depends. It doesn't depend. You can ask them that up front, okay? One thing that I'm going to cover that in step 2. So those are the basic things you can ask just to get an idea of what that cost is going to be. The second part's going to be, you've decided to apply for a mortgage. Now, In step 3, you get a loan estimate. But in step 2, since you don't have a property identified, you're going to get a what's called a fee itemization sheet, which is going to break down the closing costs. Now, one thing that I want you to take a step back and take a breath when I say this part is closing costs are made up. I cannot stress that. The reason why closing costs are made up is because closing costs are primarily made up of third-party fees, not the lender controlling everything on the closing on a fee itemization or a loan estimate. They don't control it. But what they do control is going to be the origination fees, underwriting and processing fees, and discount points, because they're controlling that within their margins. Now, you have to be realistic at some point. Lenders can be extremely lean, but if you're trying to get a lower and lower rate, you're going to pay for that rate. So just be mindful of that fact that exists. A fee itemization does not bind the lender to anything. And it's also insane that I look at these all the time. Again, thank you to viewers like yourself that will submit, like, I'm in the home buying process, I have a pre-approval, and they'll send me like 3 different quotes, and I'll look at them and I'll be like, well, one of them is misrepresenting how much title fees are actually going to be, because with at least on average, we know what the cost is gonna be, but they'll lowball it. And then we'll look at, let's say, escrows, how much money they need to set up for reserves. They lowball those numbers. They misrepresent what the taxes cost on a monthly basis, and then they mess up the how much money is supposed to be collected. So then clients are like, well, look at their closing costs, they're much lower. They're made up. They're made up. The only thing you should be looking at is the rate. It's going to be looking at what the origination fees, underwriting, processing fees, and discount points are. That's the only way you could really compare lenders. And again, a fee itemization, there's no legal bounding to it, so they can make up whatever and send it to you. Okay, this is why we go into step 3. So I also kind of take one step back, is that typically when we see people go through that pre-approval or that shopping phase, right, it's these 3 phases, because things will change over time and we don't want you to get, screwed on anything. That just wouldn't be good. We're all veterans here, or at least trying to use our VA home loan, and housing is already expensive, and saving $8,000 is a lot of money. Like I use in a lot of my examples, because the average price point is $400,000, and veterans using the big banks that they love normally get charged 2% more. That's why it's $8,000. You stay away from them, you're in a good spot. Now, let's talk about you going under contract. Once you go under contract on the property, you're going to get a loan estimate. The main thing you need to be looking at is going to be, is the interest rate locked or not? And that's a discussion you should be having with the loan officer ahead of time. Like, what are the rates? Should I, how much does the rate cost me in discount points? But anyways, this is kind of where the rubber meets the road. You're going to finally find out, was the fee itemization correct with what they put for origination fees and closing costs? You'll be surprised. This is why normally people will have a couple people when they get to this phase, so then they can kind of like really make sure this works. On top of all that, you want to make sure that your person you're working with is competent, because we see too many calls every day from people that are having last minute issues with closings, and we'll help you fix that. So if you guys want to schedule a call with us, always happy to help. So again, you're going to review the loan estimate. You're going to review that the rate's locked, how long it's locked for. That's an important thing. By the way, if you're closing in 30 days, you shouldn't be getting a 30-day lock. You should be getting a 45-day lock. Why? Because things go wrong all the time. And if you don't adjust for that, you could be paying a lot more in penalties than just getting a longer term lock. So keep that in mind. So origination fees, discount points, processing, and underwriting fees, all are the things that you want to be able to take a look at. And just note that just because you locked the rate doesn't mean a lender can't do a float down. So if rates really improve, a lot of times not a lot of times, should I say, some lenders will be able to drop the rate down for you for no cost. I recently talked to people that were like, oh, they're going to charge me $5,000 to float the rate down. Mind blowing. I'm not sure. It's a made up fee. Lenders could literally just like move something and it does it. I know this because we do it. So anyways, guys, hope you loved the video. Hit smash the like and subscribe button. I'll catch you guys soon.